The Hedgeless Horseman here. It's December 19th, 2024. Uh, Today is a very volatile day, and I've been doing a lot of copium posts, as some people call it, on Twitter. I thought I would do a video as well. I haven't done it in a while, and I guess uh, it's even more appreciated on a day like this. Well, first of all, let's look at what is happening. Currencies, I don't care much about that. Markets are up a bit, I guess, today. I read that, I think it was the Dow Jones that had this losing streak here. I think it's something like 7, 8, 9 days in a row. Apparently, the longest losing streak in since 1978, which is kind of interesting. As always, in the grand scheme of things, I mean, short-term volatility um, feels like, I don't know, you feel it a lot in the present, even though in the grand scheme of things, I mean, you're gonna have tons of corrections along the way, especially if you're after big returns, because that takes years. So you will, I mean, obviously, the more time, the more corrections you will have, and the same goes for junior multibaggers, for example. I mean, I've seen 600% moves in some juniors, which included 12, 30+% corrections or something like that. So I mean, you can just imagine if you don't really have a good, solid, long-term case conviction, where it's like, I mean, in my opinion, how do you get conviction to hold on, and especially buy cheap, buy as something sells off? I mean, that's only really possible if you have high conviction that you think it's actually not worth $1 today or X today, or at least that you think it's going to be worth 5X in 3 years or something. I mean, then if it goes from X to 0.9X or something like that, you're just gonna, wow, okay, I'm gonna make even more money. You have a long time frame. If it goes up to 1.3X, maybe that doesn't change much because you're looking at 5X or whatever in like, again, 3 years time. So in 3 years, I mean, a day is nothing. It's like you just begun the journey, let's say. And then it goes from 1.3x to 0.9x again. A big sell-off for whatever reason, market volatility. This is assuming, again, there's like no real company news that warrants that kind of a slide. So it's just fund flows, basically. You're not gonna get scared by that. Maybe you'll buy more. Maybe some other stock that's up to 1.3x. It's doing okay. I mean, again, like what I typically do, you do some small value shuffling here and there, because the one thing I hate, and it's hard when you're all in at all times, that you don't have any money to put in. So it's like, for me, it's extremely frustrating on down days if I don't have any money, which I almost never have because it's fully invested. So the only thing you can do is really, some value shuffling. And I do it, I would say, like, I mean, that's what I just hate. Knowing there's an opportunity in front of me and not being able to do anything about it. Most people complain when something goes down because they feel like this is a curse, this sucks, it's down in price, my portfolio might be down today, which in the grand scheme of things means nothing. I mean, again, who cares what the portfolio did in this week? I mean, it's like, I mean, depending on how long your investing career is, it's like this is what you're after, really. I mean, the long game. In between, you're gonna have bear markets, bull markets, consolidations, whatever, spanning years. The mining sector is of course much harder in a sense than just a general stock market index. It's much more volatile as well. But that's kind of how I soothe my, I don't know, I'm not gonna say anxiety, but it's like I whenever I get money in a market like this, that's why it's like as soon as I get money, I put it in, especially today, right? Because the juniors, especially gold juniors, have pretty much never been cheaper relative to the value of their projects. So I'm at, I mean, my bullishness has just been going up the last 2 years, basically. I thought this sector was cheap 2 years ago, and again, I battled somebody today who keeps talking about, well, the sector, that you've been wrong because you've been in this sector and it's been down for 4 years. Like, if you know me, I don't try to predict much except for what might happen for specific companies. I have no idea when we're going to go into a bull market. I have no idea that a bear market would start in 2020. I don't do timing. When I try to do timing, it doesn't work out well. What has worked out very well is simply to always try to be positioned in the cheapest juniors you can find, because then the risks are to the upside with time. And I can be wrong with some cases, or some cases might fail that I think I think it was a good buy, but they simply don't pan out and I lose money. That comes with the territory. The ones who actually do make it, let's say, have a store that gets better and better. If you hold it long enough, it might be up, a few hundred or several hundred of percent. That's gonna pay for a bunch of losers, which you lost 50% in, etc., etc. And typically, I try to let the risk part of the risk-reward function dictate my position size. So I will typically, I mean, I have a bunch of juniors with that are like 0.2 to 1% positions. Most, if not all of them, are high risk, high reward plays. I think they're cheap, but still, it's like, hey, it might be a 70% failure rate or something like that. So I have to diversify away that risk. So I have, I mean, through the years, I would say, I mean, except for bull market runs, because you're up in everything then. But overall, it's like I bet I have more failures than, more stocks that I've lost money on than stocks that I have made money on. The thing is that the ones I make money on make more than up for the stocks that go down. I mean, what you shouldn't really be doing, which I kind of did in the beginning, is like, you take huge positions in high risk, high reward cases because you're enthralled by the reward side. So it's like that's more you're acting on greed. It's like, this is how much I can make if this goes well. I mean, that's basically what crypto is all about. Except there you don't even have fundamentals, for better or worse. But in juniors, it's like, I mean, the larger the position, again, it's like if you have a case where it's like you think there's quite low risk, that if you hold this for whatever, it's like 2 years, let's say. If you just look up this position for 2 years, you think there's a small chance that you're gonna lose money. There's a good chance you're gonna make 100 to 200%, and there's possibility to make 1,000%, or especially after like 3 to 5 years, let's say. That's a great case. It's like, okay, then I feel more comfortable taking a big position, because if you have a base case that's like, this is probably like 70-80% gonna make 100 to 200%. That's, I mean, those are ridiculous returns in a 2 year time frame, even though that is way, way, way too low of a reward function for absolutely the vast majority of people. If you tell someone, for example, that, hey, you're gonna make 50%, 100% certainty. I mean, it's not possible, but just to make an example, 100% certain you're going to make 50% per year in whatever asset. Most people will not buy that because they think it's too small of a reward side, because they could be in something that could go up 1,000% in their mind. in a year, for example. So they won't even be interested, even though if you would compound, if you would find situations like that would compound 50% per year, you're going to be richer than Warren Buffett in like 20 years or something. So that just goes back to human psychology. That's how we function. I kind of functioned the same in the beginning, in a sense, and there was a bunch of stuff I didn't really appreciate. Like in my mind, a stock that had 10x potential, meaning typically an exploration stock, I thought I had to be in before the discovery was made in order to get the 10x. Even though if you look at some prevalent cases like whatever, Great Bear, I mean there's even more like older ones, but like NGX, Philo Mining, whatever. I mean, if you got in after the discovery hole, when the chance of success might have gone from like 3% to 20% or 30%, that might be again if the price went up 100%, and it's like if you're stuck with it, oh, okay, now I missed the boat. Well, if you pay up 100%, but the chance of success might have gone up tenfold. And the risk reward might be up a lot more because there's less chance of losing all your money, instead of betting pre-discovery when there might be a 97% chance you're gonna lose 50%, something like that. That kind of stuff, it took me a while to really figure that out. It's like, I mean, that plays into how just the market functions. I mean, nothing really gets priced in one day, in a sense. That's why, I mean, otherwise you wouldn't have trends. Small stuff like that, which is absolutely again makes a big difference in the long term. If you can avoid making mistakes, the more well thought out your reasons to buy and sell and hold, and the time frame, etc. I mean, if you keep stacking all those advantages, or you realize that, okay, people tend to do these mistakes and it doesn't really make sense when you think about it. I mean, if you can just, every mistake you avoid adds to your future returns. Every opportunity you can identify and use, every tool or whatever concept, that's gonna add as well. So it's like, in my mind, I get better and better each year, because I get to see more scenarios. I've had 8-9 years to think about stuff. And I think about miners and investing every day, like 6 to 8 hours a day, and I like to do scenarios. Like, okay, why did I go again? It's like, why did I put some money into this pre-discovery drill pay that only had money to do 5 holes? Because I was greedy. What was the actual chance of success at the time? And in the forum, the sense was this is a 50% chance. Nobody knows what the exact chance are, but we know that not 1 in 2, half of all the maiden drill campaigns end up with making a significant discovery, because then we would have hundreds of significant discoveries, and we don't. So I was gonna say over optimistic, and there's context matters as well. I mean, like Condor, for example, I bet big in Condor, and that's down, I mean, from the highs, I think it was up to 50-60 cents going into ASI results. I mean, it's at 12 cents now, so that was a big hit, obviously. But that is one I don't necessarily regret. Maybe I had too big of a position, but I can't really go back and say that. I mean, again, given the context there, it's like you have this long outcrop, you have the geophysics lining up, you have, experts that looked at the project and all that. So it's like that was, and the idea that, well, if they hit, which I thought it was like I thought personally it was, I mean, intrinsically, I thought it was over a 50% chance. And again, nobody knows what the exact chance is. I mean, either you're going to hit and it's going to look like it was 100% certainty, because, I mean, geology didn't change. It's either there or not. We have to make our own assumptions. So that is one that I've lost money on, and that was a big position. And and who knows? I mean, how rational that was. I don't regret it. I wished a different outcome would happen. And then there's like Goliath, which you had all this outcropping mineralization as well. I mean, somewhat similar in a sense to Condor, but they have tracked it over a kilometer and all that. That proved to be like, yes, that worked out and has been working out. But what the exact, can I again? Can I say, okay, I thought I thought the odds were good in Goliath. Okay, you buy in low. It works out. They make a discovery. What you hope would be there is there, and I mean they're finding even more. Can I necessarily say, well, I made money on it, so it was a good buy back then? No, because you never know. That's the thing, and that's why you can't really take any results too personal. The only judge of your decision making will be your long-term returns. That's it. You can have absolute idiots who have, let's say you're a good investor. Uh, let's say you have a year you're down 20, 30%. That's an example. You have some absolute moron who went all in Fartcoin or Dogecoin, he's up 1,000%. So if you just look at that 1 year's return, you would say that, well, he's an infinitely better investor slash speculator than you because he's up infinitely more. But that's not really true, is it? Because he could also be broke in 5 years. And if you are a good investor, you're going to make that loss back in time. So that's the only way to really judge. I cannot look at, and I did a tweet about this recently. Just because I made money in a story doesn't mean I was. I mean, if I knew I was gonna make money, same with Goliath. I can say it's like, look, I told you, it's like if I knew what the outcome would be, I would be 100% in. If I knew a stock was gonna go down, I would have zero. But nobody knows. That's the thing. So that means, I mean, we can't take any result really that personal especially in a short time frame. It's only like, let's say your portfolio over 10 years. If you have excuse me, if you have on average made sound decisions over 10 years, that should, again, you should be up, because it's the same in poker. You can have streaks where it's like you lose more times with aces than you should. I mean, let's say you should win 82% of the time over an infinite amount of hands played, and you lose 90 because it's aces, so you're going to be betting a lot. So that extra 8% of times you actually lose money, that might mean that, hey, that month you're going to be down. But in the long term, that should be a winning month. It's just that it was a bad variance. And in those cases, you actually know. I mean, you can, most of the time or often, you can see the actual holding cards of the opponent. And if you have aces, you know by default you're the favorite. You know by default it's a good all-in. Still, you can lose money on it, knowing that these are good bets. You can't just look at aces and when you lost, you say, well, I shouldn't have went all in because I lost with aces. No, that's not how you can look at it, because that information is worthless, because you only know that after the fact. It's like all the whatever people who don't have any skin in the game, for example, and then they come and say it's like, oh, I knew it or whatever. It's like, if you see me, it's like, I don't remember last time I said it. It's like, I dude, I told you so's, because in honesty, I mean, even the ones you were very bullish on and went up, if you knew 100% certainty you would make a lot of money in that, I would be 100% all in, and then I would be fooling myself, because there are no guarantees. If that makes sense. So it's like we can't take stuff too personal. Important thing is conviction, and one thing is like the only way really to judge your conviction is how you react to a down day in price. Let's say you own 20 stocks 20 juniors. Uh, you have a, excuse me, I have a nail. You have a market flush, like today. Gold's down 1.5%, silver 4%. Let's say, whatever, all 20 of your stocks are down today. Because, again, people are in the mood to sell. And probably none of those 20 companies even had any news out. Maybe one had news out. So the actual value of those companies changed for one of the 20 companies. Price, however, might be down 1%, 2%, up to 10%, who knows? Okay? Price changes. And price is, the market price is supposed to reflect the long-term value, all long-term value of that company. If a gold unit is down 5% today because gold is down 1.5%, does that make sense? Did 5%, all the possible long-term value in that case, go down because gold was down 1.5% on December 19th, 2024? I doubt it. I mean, it's pretty much impossible. And again, with no news out, it is basically impossible. Especially if the project isn't going to be a mine in like 5 years or something, then matters almost doesn't matter at all what the price is today of gold, except for yes, I mean, there's add-on effects like sentiment got down, then some momentum traders came in, let's say, and some TA and whatever created a downtrend. That means a bit more dilution long term. So yes, in a sense, there's stuff that, I mean, it's a self-fulfilling prophecy basically. But from a real at face value, nothing changed. The value did not go down because nobody knows what the long-term value is from that project, and it's just it's just a easy way to cope or explain the price decline. Well, gold is down today, so people sell. People are in the mood to sell. It goes down, and then it's like, well, yeah, price went down, so the value of the company went down. I mean, but you have to be a moron to believe that's actually the case. And Rick Rule talks about this all the time. It's like, why does it matter what the price change today from yesterday is for a junior that won't be in production for 5 to 10 years? I mean, it's irrelevant really, but it still has huge effects, and people buy into the effects. But yeah, so anyway, going back to the point, if you have 20 juniors, let's say 20 of them are down. If you're scared to death, if you, let's say you have, I don't know, again, I'm always all in, but let's say you have you're not like me, you're not a full-on mining stock picker, let's say, but you have one portfolio for mining stocks or junior stocks, and you have 50% cash in that, and you have a sell-off in all 20. I mean, if you feel like selling all, especially if you feel like selling all of them, whatever, and you have no like reaction that you see some junior that you liked yesterday, it's down 6-8% because the market is the sentiment today is bad, and you have no like inclination to maybe put at least 1% of that cash into that stock because you just got an 8% discount on nothing. If you don't get that urge, I mean, it kind of says everything, especially if you get an urge to sell. It basically tells you that you don't know why you own this stock. You have no conviction. You just look at the price going down, and to you, or it tells you, because you have no idea what you're not disconnecting the value from price, so you think value went down. And in your head, if value went down today, it might go down tomorrow, so you're gonna sell, even though it's just price fluctuations. So there is not the only way to truly test if you have conviction is through price declines. That's the only real test, because you might have an idea that, I think I know this case, I'm a long-term investor, I think I'm rational, a sell-off happens, and you panic immediately. It's like you get a sense, I should be selling. And you fear, because let's face it, people are not selling today because metals are down. Well, people are not, because they've already gone down. Right? I mean, anybody selling now, for example, they're selling because they think it's going to go down more tomorrow. That's the thing. because it's already happened. As soon as the, let's say, the market is opening and some juniors down 8% in the open, the decline has already happened. So if you're selling then, it's because you think it's going to go down more, right? If you thought it was going to go up tomorrow, people would buy it. It would actually end up higher because, okay, if I think it's going to go up 5% tomorrow, there's no price too high to buy. So that's actually what's happening in practice. People are not selling because stuff is down today, because that's already kind of happened. People are selling because they think it's going to go down even more. That's how you form these trends. That's why the junior sector is so cyclical. That's why the cryptos are so volatile. People are really betting on trends back and forth. And the longer the trend has been up, the more people think they're going to go up tomorrow. The longer it's been down, the more people think it's going to go down tomorrow. That's why in the junior sector you have these face-ripping rallies of 500%, followed by 80% crashes. Huge trends. And everybody's basically a trend follower. And that's the thing. It's like a lot of people, including myself, might shit on crypto, for example, because there's no value there. It's just a momentum play, etc. But let's be honest, most people treat juniors the same way. Because if value didn't change, price went down, and you sell that because price went down, and I mean intrinsically you're selling because you think the price is going to go down more. If you do that just based on that hunch, that emotion, let's say, I mean, you're basically selling something that's even cheaper than you held it the day before. So what are you actually doing? You're not value investing, obviously. No, you're just a momentum trader in that case. But the few cases, let's say, that you are have conviction, and I'm not going to pretend there's like, oh, I always have super solid conviction in everything. No, it's just, again, you have to have a price decline to really flush that out. But the idea is that what I tell people now, for example, is like, sell your low conviction cases. If you're down 70%, your portfolio is not going to thank you for not taking the loss because, oh, I'm down 70%. If I sell it now, I'm not going to get that 70% back. No, but again, your portfolio is not going to thank you for not selling something that maybe has no business going up. I mean, some cases out there are down 70 to 80%, and for a good reason. That doesn't mean they won't go up 300-500% in the next bull market, but if you can't see why it should really go back to the last highs or higher, then why keep it, if you know what I mean? No, that's a psychological thing. It's like, oh, I'm gonna make the money back the way I lost it, for example, on paper. Why? I mean, sell that minus 70%, get into something you think maybe has a good chance of going up to 300%, could go up 10x. Because, again, compare that to being or having that money stuck or leave it there in that case that maybe have failed and has no real business of going up 2, 3, 4, 500%. All of that's a psychological mistake. That's going to add up. That's going to weigh on your long-term returns. That's not rational in no way, sense, shape, or form. Your money should always be put where you think the highest or the best risk reward, highest future returns are for the lowest possible risk at all times. You just have to take those hits and move on. It's like in poker. I mean, the biggest thing that basically killed people in a sense is that they went on tilt. It's like you lose a few hands or something, or have a bad period. Like maybe you're losing over weeks or months, and maybe you have bad variance, so it's like you were actually a bit unlucky, and eventually it's like you can't take it anymore and you start to change the way you play. That happens for a majority of people. I think it's like the stock market, 1 in 20 makes any money in poker, and usually it is because sooner or later they can't control their emotions, and then they basically blow their whole bankroll. Some do it in a day or so. They go on tilt. It doesn't make sense. It's just that you psychologically can't cope with the pressure and the losing streak and looking at all that red, and you want to make the money back that you lost, maybe in the way that somebody won it from you. So if some people get lucky against you and they win and you lose, even though you're playing better than them, sooner or later, I mean, that's happened to me. It's like you start playing like them because you're hoping for some universal fairness in a sense. Like, well, if he won it that way, well, I'm gonna start playing bad like they do, so I can also win, because I can win when I'm playing, well, good and rational. But that's obviously not a rational thing to do, and that's not how variance, etc., works. It's just that no, you were on the wrong side of variance, but you shouldn't win all the time you're all in with aces, etc. You should literally lose 18% of the time. Yeah. I hope some of that made sense, but my point is, like, if you find yourself during these flushes, if you get, again, bullish, it's like you see a case and you actually add, that's a great sign. That means you have an idea of what you think the value is, where this might be valued at in 1, 2, 3 years forward or something. You have an idea what you expect in terms of news. You think it's, again, you think it's worth 600 million. It traded for 140 or something. It went down to 130. You can have that conviction that, oh, you think it's worth 700 million. It just got cheaper. I'm going to make even more if I buy more today, more than I will have made from the level yesterday. That's a great sign. Then you know you're onto something. Seriously, even if you might be wrong or the case might fail, at least you're doing that thing right. You're actually trying to take advantage of volatility. And not just, oh, you held it yesterday, now it's cheaper, and then you sell. It's like, for what reason? Did the case change? No. You just get led by your emotions. You get led by everyone else, how Mr. Market is acting. And the thing is, like, I mean, people shit their pants today holding real assets, like historically undervalued real assets, and people, get scared to death on a day like this and probably sell low. But it's like, I mean, to me, and if you listen to Warren Buffett, for example, volatility is not risk. Crypto has huge volatility, but it's like, it also, in my opinion, has most, if not all of them, have infinite risk. I assume that all of these will be at almost zero real value over the long term. That's why I cannot even get myself. I mean, I've thought about maybe next time Bitcoin is down 70%, maybe I should put a trade on. But even if I would do that, I don't think I could muster up more than, getting in maybe 1% of my portfolio, maybe 0.5 or maybe 0.1%, because I am just extremely uncomfortable knowing I bought something that I think there's just a matter of time. It's a matter of when, not if, I'm going to be losing money on it, if I hold it. So in that case, you are literally trading and market timing, and that's just not something I am comfortable with. So it's like, obviously traders don't really have that problem because they don't really lose. I mean, in those cases, I mean, people say the market is always right. I mean, for traders, the market is always right because the market price is again the only thing that matters. As a value investor, or I mean, that's how I would describe myself. You're more looking, okay, what is the long-term value? What could have happened over the next 6 to 36 months? What do I think the value will be of the company then? Okay, what's it selling at today? Assuming all those catalysts happen, assuming your base case plays out, do I think Mr. Market will be valuing this higher? The price is going to at least be higher than what I paid for it. So like, if I think that's a good probability, okay, that's something I can buy and hold until the case fails or whatever, it gets too pricey. That's one thing also. It's like when people when people, what could it have been? It's like yeah. When people ask me, it's like I'm a value shopper. Anybody that follows me knows that I'm a value shopper. I don't do typically I don't do much trading at all. Sometimes I do micro trades. Shuffle 0.01% of the portfolio just to like again soothe my frustration of not having more money. So it at least even if I value shuffle for $300 in a day, I sell something that might not be down. I buy something that's down 9%, and nothing has changed for either case. I feel like I'm taking advantage of that, and I might be. It's not gonna, amount to a huge difference in the long term if you do a 0.01 percent value shuffle, but that money, that $300 might be, I don't know, $700 instead of $650 in 2 years. So it does add up. But anyway, my point where I was going is that a lot of people when it's like with the top 15 hodl folio, for example, it's like a case goes out of the top 15, or it's like somebody asked me, it's like, why did you sell Snowline Gold? The problem, that's why I tend to not often say is like, what am I selling and or what am I buying or selling? Why? Because like if I have let's say I have a huge position and it goes up, let's say 100%, and I'm already at nosebleed levels, and it goes up, it doubles, okay? It's like already, even if I like the story even more, I mean, yes, the position would have gone up 100%, so I would have 100% more exposure. Let's say the story got 200% better, whatever. It's like there's obviously some point where it's like, even if this is my favorite story, I think it's the cheapest one I know of, I can't really go, have 100% of my net worth in something, right? Or you like some story, it goes up, it revalues, it plays out. You have other stories that's like, well, I think they are gonna do what that's gonna do, and I think they're even cheaper. Then I, might shed some of that into the ones which are getting cheaper relative to the thing that's going up. But oftentimes people see it as like, wait, did you sell any of that stock? Like you would be bearish, if you know what I mean. It's like I remember same was with Novo, especially back in like 2016, 17, because I had 30% of my net worth for a time there at, I don't know what the level was, like 50, 60 cents. And it later ran to $8.8. And then now it's crashed down to, what is it, like 10 cents or something? But anyway, on the way up, and I didn't know much about miners back then. I didn't know much about Novo, except that it's like, okay, they're looking for something huge. If this works, if it is huge and they get to monetize that, I could make a lot of money. And they had, Beedens Creek at the time, yada yada. So it's like, okay, well, they have, a deposit at least. But my point is, I had a strict kind of rule when it started to go up. It's like, I don't want to have more than 30% of my portfolio in this, and this was 30% of my net worth. And that's an obscene amount in one story already, right? So when it goes up, I have to obviously, the more it goes, the larger the position becomes if I don't sell. And when people are like, oh, you were selling on the way up, it's like making it look like, or making it sound like I was bearish or something like that. It was my largest position basically for the entire move. That's not bearish, obviously. I was like, I should have sold maybe way earlier. And then, of course, I got in even heavier later, and I was all in when it went down 30% in one day. That's obviously grossly greedy. I mean, that was by definition a mistake, regardless if what the results would have been. It's like to be 100% going into bulk assays. That was just pure greed. Which I'm not. Since then I've never been all in anything. So I learned from that, and that's gonna obviously help me in the long run not to do that again, no matter what you think the case, how good you think the case is, because it's just not worth it, especially the high risk, high reward case. I mean, it's suicidal in a sense. But my point is that's why it's so hard, and that's why I have, made that HODL top 5 portfolio, because it's mostly supposed to be like cases where it's like you don't really need to do much trading. I mean, I barely do any trading in the HODL folios, but that's the thing. It's like if I sell 1% of a position to buy 1% of another position, it's like First Nordic, for example, which I have a very large position in. To get a large position in First Nordic, I have to sell other stocks. If I own them, I think they are cheap. So I'm selling stuff I think is cheap and are quote buys to sell something I simply think is a bigger buy. And then it's like, well, if you're like, oh, I sold, let's say, I sold 15% of 10 stories. It's like, oh, you're selling, you're bearish. Well, I'm not bearish. It's just I'm even more bullish on that, if you know what I mean. It's like, oh, I sold 9 out of the 10 cheapest juniors I found or I know of to buy the cheapest junior I know of. That's not being bearish on those other ones. They might be the top 1% of risk reward I know in the entire space. But people who don't understand what it's like to be all in or whatever, who don't understand it's like actually the position size that dictates how bullish you are. It's not what you're doing on a day-to-day basis. I mean, even if I sold 30% of all my First Nordic shares today, that would probably be the biggest gold junior position I have, which by definition means that's the one I think is the most undervalued. But people would, a lot of people would view that as, oh, if he sold 30%, he's bearish on it. Of course, if I was bearish on it, I would have 0. If I was really bearish on something, I would short it, which I never do, because I think it's suicidal at these sentiment levels. Anyway, I hope you get the point. That's why it's so hard to like. I mean that's why it's like it's up to each and every one, because and also my portfolio is crazy for other people to have my exact portfolio. The HODL portfolios, the family portfolios, they're more diversified. I one portfolio I cannot buy. I cannot buy names on the what's it called, the .cn list. I don't remember what it's called in Canada. It's like even smaller than the TSXV. So if I can't buy that, if I can't buy it in that portfolio, that means the portfolio I can buy it in has to have a higher weighting. So my overall portfolio has the whatever proper exposure. So that means that any one portfolio is really skewed. And also then you add the fact that I have a Hayward portfolio and participate in private placement. And some private placements I maybe wouldn't have participated in unless for the full warrant or whatever. Or warrant. Or the price. Let's say it's a discount to the stock market, which happens a lot. So it's like, then it also becomes not misleading, but it's like skewed. It's like, oh, I bought this. Oh, okay, should I be buying it? Well, are you getting full warrants? If I wouldn't be getting full warrants, then I wouldn't even be in that stock, perhaps. So that's not helpful either, because it's only really helpful if you can actually fully, let's say, copy my portfolio in a sense. But not everyone have those opportunities. Not everyone is an accredited investor. And the HODL folios, for example, they have no placements. They can invest in the smaller stocks listed on the smaller exchange. So I think that is even though they're not like buy recommendations or anything like that, and it's not like, oh, I guarantee you're gonna make money if you buy that one, copy that portfolio, for example. But at least it's like the closest I can get to, names or a portfolio that anybody can really, let's say, have a idea. Okay, how do I put together a portfolio? What names do I like? How do they stack up relative to each other? And also, it doesn't factor in placements and all of that. I mean, my personal portfolio is absolutely crazy, and that's not something I would be comfortable, showing, because that might get people really crazy ideas themselves. And you can't even, I mean, it makes sense. It's like, the saying is, you can't copy conviction, and that's 100% true. If you had the exact same portfolio as me, you wouldn't make the same decisions from that day on and forward, because you wouldn't have the same conviction in every story. You wouldn't have the same sense of what do you think every company is worth. You wouldn't have the same risk profile, yada yada yada. So that's for everyone, and everyone to decide for themselves. I take much more risk than most people should, but that's also what, I mean, this is a full-time job for me, and it's like, it kind of, I don't know, triggers me when I see people. It's like some guy I've been debating on Twitter today, for example. He whines about this sector every friggin' day, almost, and he makes it sound like he expects that because he's in the junior sector and I'm in the junior sector, that we should have identical returns, for example. That is absolutely crazy. I think, okay, right now the whole sector is cheap, so I mean the next big sector move is going to be up. So it's like, even if you actually own the whole sector at these levels after they're down 70%, that might not actually be a bad idea. But it's like, I'm a stock picker, so it's like, I don't know, it's pretty unreal in a sense. It's like that he believes he should, for example, have the same returns as anyone else because he's simply he also owns juniors. I mean, that's crazy. It's like, I'm a stock picker. I try to find the 0.1% of juniors I think are actually real buys, let's say. And there's only a few that I think are monumental buys. There's a lot of things or cases I think I could make money on at these prices, but I wouldn't have owned them 2 years ago, let's say. There's him and me, just because we're in the same sector, we're not going to have anywhere alike. Our long-term returns should not be anywhere alike, because if he spends 1 hour a week on due diligence, have no idea what he owns, have no idea what he's doing, doesn't put any time and energy into due diligence or getting better, etc., why should he have any good returns at all? Because he's obviously just waiting to get bailed out by the market. I focus on the companies. So that kind of triggers me. It's like, I mean, almost like you don't want to do any work. You should just get good returns. You don't want to be patient. You don't want to need to be disciplined. You don't want to need to do any work. Anything like that. Not think about position sizing, not think about investing theory, not even factoring in the fact that this is a cyclical sector. Just be a victim and just whine and whine and whine. And he's expecting to have good returns. I mean, it's like he's obviously kidding himself, and he's obviously not prepared to do any work so far. And all his time and energy seems to be spent on complaining about the sector. It's like, well, if you have victim mentality, you have no chance. No chance at all. How often do you see me whine about yada yada? I just keep saying the same thing, and that is what people throw in my face. Well, you've been bullish. Well, it topped in 2020. You've been bullish since 2020. Yeah, I'm permanently bullish on the stuff I hold. I wouldn't hold them if I weren't bullish on them. That doesn't mean that, like, over the last 4 years, probably the majority of of stocks I have been bullish on are down. But that doesn't really mean anything either. I'm a stock picker. I'm bullish. I don't hold any position that I don't think there's at least, decent to good risk reward. And some positions I have a huge amount to where I think it's like the risk reward is absolutely crazy. But let's go through some other stuff. This is one thing to note. Again, when people are losing their minds, I mean, now we're nearing maybe the later stage of December. It's like just looking at GDXJ. This is the seasonality chart. Okay, what's special about December? Well, it is tax loss silly season. So if you had to guess in a year, any given year, when do you think the juniors will be down the most? It would be December. And I mean, if you compare, okay, if if this is exactly how miners would trade every year, the optimal time to buy would kind of be December, or I guess late May, because you have quicker returns from a seasonality perspective, but total returns are larger from down here to up here than they are from here to here. So there's a lot of things. I think I sold some shares myself for tax loss selling, and again I'm selling buys. I wouldn't own them if I didn't think they were cheap. Well, actually, it was, I think, because I needed the money for a placement, or did I? Maybe, yeah, for a placement, and I sold something that's like, okay, well, I need money, and I trigger some tax loss selling. And if I had money, I would be buying that stock instead. So you have a lot of stories. I mean, today, for example, I did some micro reshuffling in one or two hodl folios. I picked up some, Western Alaska because it's down. I don't know. I mean, it's like 52-week lows. It's just been going down like 3-4 days in a row or something. And yes, I mean, I would expect a private placement sooner or later. No, it just it went down. I mean, today last I checked, it was down like 8% or something. It's like when I see something, it's okay. You just scan a watch list or whatever. It's like, okay, you see a few that are down 8-9%. It's like, okay, immediately that just triggers. Maybe I should sell something else to buy a bit of that. Because like always, the downside is always 100%, but it's the upside that's could be hundreds of percent, etc. So if I'm wrong, the downside is still 100% only in any particular case. But if it's gone down and it's like the market is actually wrong and just getting more wrong, that means, okay, well, I'm going to be making even more money on average in those cases if I can pick them up 9% cheaper, for example, or 30%, whatever it might be. I think I bought some Zero as well, micro reshuffling, but I just can't help it. It's like it triggers when I see volatility, it gets triggered in a sense. I have a much harder time selling something that is up than I have buying something that's down, and that's basically, I think, my probably biggest strength. I buy high all the time. I bought the 2020 top in the sector. I bought the 2016 top in the sector. But I just keep on buying, and for the time being, I mean, since 2000, since I started 2015, the downtrends tend to persist longer than the uptrends. So you have more time if you just add every week or every month. You will spend more time buying in a downturn than an upturn. So it's like most of the time I'm averaging down in a sense, if we're talking, overall sector. Just gonna shortly cover oh Jesus, I'm already up to 54 minutes. I'm very good at ranting. If people haven't seen, I put out my Magnus Opus, my Manifesto on First Nordic. It's a very long read, and I'm very proud of this actually. I think, I mean, the plan was like always, like it is with these rants I do, I always have an idea. I mean, I used to start every video almost with like, oh, I'm just gonna make some comments, like it's gonna be a quick video, and then it gets up to an hour. I planned on doing a short one because like I had already put out so much stuff on Twitter and in the forums on First Nordic, but I just figured like, hey, I've not actually done an article on this one, and this is my highest conviction case, especially in the gold space. Well, in a sense, it's probably my highest conviction case of any junior of any metal right now, except for a private deal that, I mean, nobody really can get into anyway. But in terms of public sector, and without factoring in yeah, I mean, other context I was gonna say. No, so this is my highest conviction case right now. Could that change? Absolutely. I mean, it could change by price going up a lot without news following. So it's like if I think it's worth 300 million or 400 million today, if price tomorrow went to 300 million, obviously it's not as good of a risk reward as it is today. And again, that comes from simply value shuffling. But if the value went up 300% and the price went up 100%, maybe I'll even add. Well, I have such a big position that's going to be hard, but you get my point, I hope. Anyway, so I started writing this, and I just that's what typically happens. I mean, usually I have especially when it comes to high conviction cases or yeah, very high conviction cases or high conviction cases overall. I think my gut feeling is pretty good. Like can quickly kind of summarize in my head what I think the risk reward is without putting it down on extensively or writing an extensive article. But once I do that and force myself to actually consider all the angles at the same time, usually my conviction goes up, because it's hard to have all the different factors in your head at one point. But if you write this and you can go back and look at it all the time, then you're like, right, I mean, it's not only this that plays a part, it's also this, and this. But the market doesn't function that way. I mean, the market focuses on one thing. That's why multi-asset juniors are very cheap. That's why spin-outs tend to make a lot of sense, because it forces the market to, I mean, if you have two assets in one company, you're mostly going to get credit, and today you're not even get anywhere near full credit most of the time for the flagship asset, what the market is focusing on, whatever that might be. But if you split it up, you force the market to actually, I mean, value one asset and also the other asset. And then that's how, I mean, why the Landins are so successful and why they do spin-ups as soon as they have meat on the bones in more than one project. And I mean, just look at the spin-out value of like whatever NGX and Philo and all that. If they were in the same, let's say you have, I don't know, I don't remember exactly what got spun out, but if you took NGX and Philo mining together, it would not have, I don't think, the same market cap in the same company as the combined market cap is for Philo mining and NGX. I wholeheartedly believe that. Again, that's just because the market cannot factor that in well. And also, you will have the fact that the ones that really like NGX might pay a premium for that company, and the people who really like story of Philo will pay a premium in that one. Whereas if you have both, maybe you like Philo's project but not NGX, so you won't have the same like appetite for the combined company. I mean, that sounds reasonable to assume. But anyway, so there's just so many different angles to this story, and some that I hadn't really appreciated, for example, and I'm a Swede, and I didn't really appreciate that until I really looked into the Swedish capital markets and thought about, okay, how do Swedes invest and all that, a Swedish listing might be, one of the more impactful, pretty much no risk, but maybe high return angles of this story. Um, so I've had to add a section on that, and it's also for myself. So it's like when I was already very bullish on First Nordic, but while writing this, I dug into it. It's like, oh Jesus, I mean, I might be or I might not even have accounted for one of the more impactful value drivers, or price drivers, I should say, because it doesn't necessarily affect value, but it affects perceived value, or how people um, will price it in a sense. So I mean, I don't. I mean, again, this is not a buy recommendation. You don't have to agree with me on anything. I mean, we don't. I don't share your profits or your losses. This is like, I'm saying this is right now. My at least in the gold space, my yeah, I'm gonna say by far kinda highest conviction case. I think Integra Resources is very close as well. But to me, I am the fact that this is in Sweden, and given the Integra is more like it's not as complex. It's more matter of fact. Yes, it's obviously cheap, but they have more advanced. I mean, the stuff that's not priced into Integra is like more advanced in a sense. Whereas like in First Nordic's case, it's well, Barsele is much better than the market is getting it credit for. I mean, that's insane. I mean, First Nordic would probably may now that I think about it, actually, I mean, if First Nordic only had Barsele, their 45 interest in Barsele, that might still be one of the absolute cheapest juniors I see out there, because I think Barsele is such a great deposit. But then when you add on everything else and the potential price drivers of a Swedish listing, and actually unlocking or monetizing a potential huge exchange arbitrage opportunity, that just puts the risk reward, in my opinion, in the stratosphere basically. So I go through all of that. I think it's one of the most fascinating cases I've seen. I'm very happy with how this turned out, and I mean, if you're um, let's put it like this, uh, lazy people, it's like, well, I'm not going to read a long article like that. Well, again, it's like, goes back, you get what you deserve in a sense. I mean, the more work you do, I mean, why should I have, let's say, better returns than the guy that keeps whining about this sector to me every day? Because I do work. Like, this took a month to write, and it's backed by 9 years of experience in this sector, and a million hands of having played poker, and the knowledge of, being a Swede, which you can't replicate really. So it's like I say here, to fully appreciate the risk reward, I mean, I list all the things I think you need to know, and that includes Sweden as a mining jurisdiction and Swedish capital markets. And you have to be aware and know the story. So how many people do I think check those boxes in the world? I don't think that's a lot of people. It's like, I mean, I think I know First Nordic better than most people in the world, and I just happen to be Swedish, and uh, now know even better how Swedes tend to invest. For example, just how few actually buy stocks on the TSXV, for example, and that's the potential, huge exchange arbitrage that could take place. And that's not. I mean, there's no risk really. I mean, you're risking whatever the money takes to get a listing, because it's not like people in Sweden can sell. Oh, we're listing in Sweden, then they, sell for whatever reason. No, if nobody in Sweden really owns it, they have nothing to sell. So it's like, again, an asymmetrical bet in a sense, which could have huge payoff. So when you add all those things together, this is one of the most extraordinary cases, because there are, again, so many angles. I mean, compare that to a project or a company where it's like they have a mature project. Yes, it says the NPV is $1 billion today. It's selling for 100 million. They can't do much in terms of creating more value. So I mean, that's in a sense, and let's say it's in Canada. It's listed in Canada. I mean, the only obvious play there is like you're waiting for the sentiment to change. You're waiting for that beta play to go up. But there's not like layers upon layers of like, oh, they have a bunch of huge targets that you're not pricing in. There's no exchange arbitrage because you're already in the Canadian exchange, and Canadians pay premium to that, and that's not going to change, yada yada yada. Or you don't have a spin-out project, etc., etc. So it's like in this one, it's like almost a unique amount, especially a unique makeup, pretty much of potential catalysts or let's say opportunities. Some are pretty much unique, and when you add them all together, there's like huge optionality on top of the obvious price to value discrepancy just in light of the Barsele deposits. So yeah, I think this is one of the most unique opportunities I have seen and expect to see, because you can't even replicate it really. I mean, since the First Nordic has the largest gold deposit in Sweden, you can only do that once. I mean, you can only list the largest gold deposit in Sweden once, because only one project can be the largest gold deposit in any country at any one point in time. There can only be one king, and First Nordic is the king of gold, or Barsele is the king of gold in Sweden. So that's a one-off opportunity until somebody would find an even bigger deposit and be listed in Canada and do the same thing, which, I mean, when's that gonna happen? I don't see anyone that's even close. And if that happens, well, that's years from now, and the listing is expected to take place in Q1 of this year. So that's a unique, in a sense, opportunity. Yeah, so I mean, these I just did some Copium posts, like scenario on December, which is the day the price of gold is 1% lower than December 18th. How much did the value change for Junior X that will have first pour in February 12, 2032? I'm just to prove the point, or make the point I did earlier. And let's say Mr. Market sells that down 10%. So Mr. Market is suggesting that 10% of all the long-term value of this company and this mine that's not going to be actually selling gold until 2032 went down 10%. I mean, that's obviously ridiculous. Is the cash flow going to be expected in 2032 by the fact that gold was down 1% from one day to the other in 2024? Of course not. And that's just to make to prove a point. I like to make an extreme example of it. Yeah, this is also, I mean, this is my way of, let's say, trying to keep morale up, in a sense, just pointing out how ridiculous it is really that we just to point out really how silly we are, in a sense. I mean, take Barsele for example. I mean, what changed? Nothing. It's a deposit worth well at these gold prices well over $1 billion, and gold is down 1% or whatever. It's like, who cares? Who gives a shit? I mean, stuff out there, and it's not only for First Nordic and Barsele. It's like there's a bunch of stuff out there. They're selling for what, 20% of NPVs, and they have projects that literally could get monetized within the next 3 years. Who gives a shit if instead of being 8 times or 6 times undervalued, they're 5.9 times undervalued because gold price went down, and then the price of the company went down, so it's actually maybe more undervalued. So it's like, yes, NPV went down theoretically a bit, price went down even more, so now it's like, it's a 6.2xer potential in the future. And people are like, losing their minds. It's like, I mean, it just betrays the fact that most people have no idea what they're doing. And I'm not saying that to be an asshole. When you think about it, of course that has to be the case, because it doesn't hold water if you think about it rationally. And this one, I like this because I think it was the same whiner guy or something, whining guy, who it's like, well, and I get it. I've heard it from friends as well. There's like, everybody is making money in everything else than the mining sector. The junior sector is like, again, if you look at the discrepancy between price and like actual tangible value for gold miners today, it's probably never been higher. Business has never been better. Juniors are still selling for, pricing in whatever $1,700, $1,600 gold price or something. So margin of safety has never been bigger, etc., etc. And people are, again, people who whine, they're taking on the victim mentality. Oh, I want to get out of this. I want the pain to stop, in a sense. So people are venting, whining, because they have a sense of a loss of control. They're losing money on paper, and they have no strategy. So to them, it's like an alarm going off. Like, I'm making a mistake, and then they throw up all this whining. It's like everybody else is making money. Basically, they're looking for an excuse to sell and go into the things that every idiot is making money in. So they're looking for they want people to agree with them. It's like, because I asked this guy's like, what is it you want from me? It's like, you do whatever you want. But it's like, they're looking for a confirmation bias. Like, please tell me it's okay. Or maybe they want just to have someone to complain to. I don't know, because obviously I'm not saying, I'm not the least interested in buying crypto and selling these generationally cheap juniors. That's not even in my universe, kinda. So if they can't see why that is, obviously, because like, well, they have juniors too, or this guy has juniors too, and he's down on it, and he has no plan. He doesn't know why. He doesn't see the light at the end of the tunnel. He's just feeling pain and have no idea how investing works. So he obviously gets triggered by it. So he's looking to kind of convince me to see it his way, so he feels better about selling low and leaving the sector. When you think about it, that's probably what's going on. But then take a step back and think what he just said, and let's say if you actually do that, what are you actually doing? So if you see all these idiots, quote idiots, because most people, pardon my French, but you see Fortcoin go to $1 billion. You see Dogecoin doing whatever it does. You see Scottie Pippen and Hawk 2 up, get people into Bitcoin, and Bitcoin reached $108,000, whatever. So across the crypto space, last, 4 months, people have been making money on average, I guess. And you're seeing that, and you're seeing whatever, Nasdaq was going up, and AI, and yada yada. So you're seeing everybody around you. You're seeing Hawk 2 and Scottie Pippen friggin' looks like they're printing money. Every idiot you see on Twitter that's a crypto maximalist or whatever, it's like they're making money. They're talking about how much they're up, whatever. So if you see that, and it's like that affects you to the point where you're selling something that all the experts would say is like, or the people that have made money in the mine space, like, well, this is the, let's say, best value opportunity in a generation. You're selling that to buy what the idiots have been making money on. What are you then? It by default means that you're getting in later than the idiots. Okay, what does that mean? Well, that's the very essence of the greater fool theory, or greater idiot theory, whatever you want to call it. You're literally getting in after the Hawk 2s and Scottie Pippins and their grandmas. That's what you're doing. You are buying in later than the idiots. Then the question is, what does that make you? So, again, it's like, this is common sense. Think about stuff like this. Does that sound right? It's like, I wonder if my strategy is that, okay, I'm going to actively get in after every Tom, Dick, and Harry is in, and obviously it's a bubble because most cryptos are worthless. And Dogecoin, which was created as a joke, got up to 70 billion market cap or something. So it's like, nobody can say it's not a bubble. So you do that. Again, what does that make you? Do you deserve to have good returns. If your reason to buy something is because it has been going up a lot, and every fool has been making money on paper for a while, that's your reason to buy something. In what world is that like a legitimate strategy that, oh yes, of course, you can make money forever with that brilliant strategy? It's the laziest form of FOMO chasing there is. And I have never seen anything with more FOMO than crypto. To me, that's like alarm bells are ringing. Because let's face, or to be honest, it's not like I'm immune to seeing all these cryptos go up. I mean, it triggers me to see that, again, every friggin' fool who has no idea what they're doing is piling into all of that, and for the time being, they are making a lot of money. While we are sitting here in a 4-year bear market. I actually think the stealth bull has been on for like 6 months, but it's like for all intents and purposes, let's say it's still a bear market. You're spending all this time, you're having like paper losses in most, you look stupid in a lot of cases. Over 4 years you've been pissed in the face, and then you see again all these idiots making money in shit, and they have no idea what they're doing, no discipline, nothing else than, oh, I think this is gonna go up. They buy it, it goes up. Even more people buy into it, goes up more, it gets even more people, so it's like more and more of these quote idiots are making money. That obviously is something that you get affected by. It's not like, again, I am 100% unaffected by seeing that stuff while we're seeing what we're seeing in the junior space, where it's like, even if you, I mean, I get absolutely, I call it spite buying. When I see something that's like super cheap, a moron would see how cheap it is. A moron would see it as like, take First Nordic, for example. To me, this is probably for me personally, this is my highest conviction gold junior store right now. Meaning it's like, again, it not buying recommendation, but to me, it's the buy of all buys. Maybe, one of the absolute, best cases. And again, when I say that, I don't mean, if I knew 100% certainty I was going to make a lot of money in First Nordic, I would be 100% all in. A no-brainer to me, like a buy or buys is like a risk-reward function that is just monumental. Okay? I'm not saying, I'm not going like sailors, like mortgage your house and you should buy this asset. I hope you understand where I'm going with this. I just want to make sure that's not what I'm saying. I can't guarantee that. It's like I already said, it's like I'm not 100% sure I'm going to make money on the ones I do make money on, and I didn't think I was going to lose money on the ones that I did lose money on. Nobody knows what the future is, but to me, from a risk-reward perspective, this is the buy or buys, one of the biggest buys to me I have ever seen in this space. And I don't know every story, so it's like there might be some case that is actually better, but I don't know about it, okay? But to me, that's, so by definition, I think anybody that's selling this right now without reasons for like, I have too much already, or this is the last position I have and I need the money, stuff like that has no real connection to the case. I think they are making the worst sells I have ever seen I can ever see in the gold space right now. So when I see that, if it's down, for example, it's like, I call it spite buying. It triggers me so much that something that is, to me, so obvious, a buy, when people sell that. Because that's like my faith in humanity in markets overall. It's enough that Fortcoin is at $1 billion, right? I mean, that's just the other side of the coin. That just makes me want to buy even more, because it's like, I mean, it's not like, in a sense, I'm almost, I want to punish Mr. Market, that I get offended by how dumb the market can be and how dumb people can be. Again, I might sound arrogant here, but it's like that I want to make even more money, even though it's like, I mean, you're making up something that's not real, you know what I mean? Because, like, okay, you bought it from some guy, the next day, Mr. Market is some other guy, and he's not gonna obviously lose money if I make money on his sales. He's gonna lose out on stuff, but it's like in my, I don't know what it is, but it's like I get triggers like, well, then I'm gonna buy even more because you're so friggin' dumb that it's offensive, and I'm gonna beat the market, aka Mr. Market, even more. So I guess it's down to a competitive thing in a sense, and that's why I mean most of this is kind of like a game because it's like game theory, investing theory. Same with poker. I mean the hands that you were most happy about weren't necessarily the ones where you won the most in. It was when you in the most obvious way outplayed an opponent. So that had like personal satisfaction more than the money itself. You were very happy if you were able to get an opponent exactly where you wanted him in a sense. And that's again, it's not personally against that person. It's just for your own like sense of, you know, a plan coming together in a sense. And I see Mr. Market as the opponent in this scenario. So I get satisfaction if I can increase my returns even more because it means in a sense you're getting better and better at beating Mr. Market. I want to humiliate Mr. Market, and I want to do it even more the dumber it is because even though that's not how it works, it's like in my mind I'm punishing Mr. Market by taking more from Mr. Market, outperforming Mr. Market even more, even though Mr. Market is not a real person. But that's actually something I think drives me, and that's why I kind of almost consider it like spite buying. That I mean, there's so much shit going on in the West that's like you can't believe your eyes and ears. And yeah, I mean, I wish that we were rational in a sense. The flip side of this, as always, is if we wouldn't have stuff like this happening right now, where Fartcoin is at $1 billion and the juniors are generationally cheap because I don't know, you know, you can come up with a lot of reasons for it, a lot of psychological and sentiment and crypto FOMO and whatever. If that didn't happen, we would not be here to be able to steal this much future returns. So I mean, the curse is the blessing. It's just that most people think it's only a curse. Well, it is a curse if you sell low. A bear market that you sell the low in turned out to be a curse. No, especially I mean, whenever you bought really, if you bought the top and sell the low, that bear market was a curse. If you started buying in the bear market, that bear market was the best thing that could have happened because if there was no bear market, you wouldn't get 500% or whatever in the next 3 years on your buys. And even if you had started buying high, it went lower and you kept on buying, you still might end up making a lot more than if you didn't know about sector. Anyway, just you had to take a lot of paper pain at first. So yeah, I mean, I love this meme. I mean, today, for example, I didn't really pay attention to the metals until I, saw the wine, and it's like, okay, what is actually happening? It's like, okay, they're down, I mean, quite a bit. So I just been posting a lot of copium and memes, and I mean that's all you can do really because again none of my cases really changed. I'm just looking at the price, and like I said earlier, it's like some micro shuffling. It's like okay, something is down 8-9% on no news. Maybe I'll take a bit extra of that. That's it. That's basically what my actions are today. Again, I'm letting Mr. Market hang himself. I'm not trying to force anything. I didn't predict that silver was going to go down 4%. It just happened. Okay, now that it has happened, what is Mr. Market doing with the prices of some juniors? Okay, oh, he sold something of 10%. I mean, silver might be up 4% tomorrow for all we know. Might be at $40 in 6 months. Nobody knows. I know for a fact that a silver company didn't go down 10% in value because silver was 4% lower today than it was yesterday. That's a fact. So that's what that's what I let, or how I let the market steer me. I am waiting for the market to make mistakes, and now the mistakes have been made for increasingly so for 2 years. Anyway, long rant. I hope you got something out of it. Yeah, I was gonna say, not investing advice, no buy and sell recommendation. Again, assume it's like I might buy or sell any stock at any point in time. It's up to you to figure out what you like. If you don't see a case, don't buy it. If you don't can muster up conviction, don't buy it just because I own it. I mean, again, assume it's like, okay, tomorrow, let's say I don't own that stock tomorrow. What are you going to do then? Right? So it's like, there's nobody that's going to be holding your hand at all times. You alone are the one that can press buy and sell. You are the only one that can get shaken out. Nobody can hit the sell or buy button for you or convince you to hold if you don't want to, yada yada. So it's up to each and every one of us. And it's like, the idea is that the more work we do, the better returns we're supposed to get. The more patience we have, the more returns we deserve to have. The more disciplined we are, the better the longer term returns we deserve to have. All of that. Discipline, due diligence, common sense, etc., etc. If you have more patience than me, if you have whatever, if you were literally me but had more patience than me, you probably have even better returns. If you have no patience, it almost doesn't matter how smart you are, doesn't matter what your due diligence is, you're not going to make it. If you have common sense and patience, I don't see how you're going to lose over the long term. I don't see it. This market is so absolutely stupid at times, and in times like this, where I mean we know where the big move is going to be. They're generationally cheap already. Where's the big move going to be? They're going to get millennium so cheap, or they might get fair priced or even overpriced. That's a big move. And that's going to happen one day. Yeah, so thanks for listening. Again, not investing advice. Assume I'm biased. I own companies. Assume I own companies in all companies I mentioned. Some are banner sponsors as well. Twice biased, etc., etc. Thanks for listening. Have a great day.